Hey guys, Mubarak here of In Penny Stock. I want to show you guys an ultimate tool today that we use for successful stock trading, all right? And it is finviz.com, free to get started with, and it looks very intimidating, but I want to show you why it's such a great tool and how you can use it in order to find out what stocks to trade, okay? You can figure out the top gainers, the top losers, stocks that are broken into new highs, stocks that have unusual volume, which usually means that there's some type of pump and dump going on, stocks with earnings. And really, this is one of the best tools that we use at InPenny Stock and in general as a successful stock trader to be able to find the best stocks, right? So in this initial video, what I want to cover is literally how you can utilize the stock screener software. And as you can see, in the stock market, there's 7,700 plus stocks. Okay. But when you apply certain filters on it, it doesn't mean you need to know all of these stocks. All right. There's certain things, certain properties essentially of a stock that we need to make sure is in place before we even determine whether it's something that we should spend our time with. Okay. So in this video, I'm going to show you how to find cheap stocks that you can start trading today. All right. And it's very simple. What I want to show you guys is, well, you can mess around with a whole bunch of different filters and with this stock screener here. And in the description below, you'll be able to kind of see a link directly to how you can set up a free account with this stock screener. But essentially, I want to show you guys one of my most popular stock screeners that we have, which is how to find very good dividend stocks. All right, so let's go here. What we're going to do is we're going to choose a dividend yield. And now you can see there's different percentages here. What I like to do for dividend yields and dividend stocks is to keep it above 5%. That's still a good, safe retainer. The reason I don't go over very high, if you have more time, you can check out very high. But the thing with very high is that there's just a lot more volatility, right? Usually I don't find dividend stocks that stay above a 10% yield, and usually it's just kind of a one-time or two-time things. But for consistent returns, I have been able to find stocks in this 5% yield to be able to benefit from. So what I'm actually going to do is I'm going to smooth this over a tiny bit if possible. No, okay. But basically what you can see is that on the right side, there is actually also the ability to see the volume. So let me see if I can shrink that in here. Perfect. Okay, so you can see the volume in the right column as well. So the reason the volume is important is because I want to make sure there's at least 100,000 shares being traded, right? That's what the volume refers to, because that allows me to then feel comfortable that I'll be able to buy and sell the stock when I need to. All right, so we've been able to filter down the stocks to about 557. Now, don't worry, you still don't need to go through all these 557. There's still some stuff that we can do. So, generally speaking, if you want to get into the stock market without much risk, what I like to do is invest in stocks under $5, right? I promised you cheap stocks. Here are cheap stocks that can actually make you a decent amount of money. All right, there's 68 stocks. They're sorted by industry. Now there's other filters you can put: country of origin. If you are just more of a stable US investor, we can put that in. So down to 48 stocks. And these are dividend stocks with 100,000 shares traded at least on a daily basis. So you can feel comfortable that it will be, a consistent trader. And what I like to do is kind of have a market cap. That way, the stock isn't too small and it's recorded. Again, it's a filtering system that I just have. So you want it to be let's say over 50 million. Honestly, over 300 million, because then, you at least have a bit more stability. And boom, you have 17 stocks here that you can look at to offer you a dividend yield. Now, one thing to keep in mind is that you can't just end the search here, all right? Because a dividend yield is simply the amount of money that the stock will give you back in a year based on its current price. All right. So if the stock price goes up or down, the dividend yield, even if they didn't change the amount they'll give you, will change for you. And let me give you an example of this. So let's go into let me see here. Market cap is high. This has a good amount. This is a REIT, a real estate investment trust, with a good amount of volume being traded, right? Has a decent market cap, low income, but the dividend is basically 8.57%, and they give out 24 cents. So what I like to do is, you have the reason FinViz is so awesome is because you can get real-time quotes, intraday charts, advanced charting tools, and you get a ton of information about the stock. Now, a lot of these you don't even need to worry. A lot of these are financial terms, and slowly over time, you can get more exposed to this and understand it better. And so one more indicator that I recommend looking at is the debt to equity ratio. Okay. Now it sounds complicated, but it's actually not. And let's dive into kind of what that is here. All right. The debt to equity ratio for the real estate sector. Now, debt to equity is basically lets you know how much, if you think about a company's balance sheet, right? There's assets on one side, and then assets has to equal liabilities plus equity. Assets is how much valuable property the company owns, right? What assets or what do they have that makes them money? And then liabilities are loans, debt, credit facilities, and then equity is kind of like the owner's portion. Okay, so what we see here is that generally speaking, REITs have a higher debt to equity ratio, so they'll have higher liabilities than your average S&P 500 company, where just say about a 1.5 to 1, whereas they say for the real estate sector, you'll see it a little higher. All right, and that just basically means that the company has taken an aggressive growth financing approach with its debt. So the reason it varies is because basically what you see here is that the higher it is, the higher chance there is of instability. Now, the reason I like seeing this here is because then I can also see the history of what top companies rated and analysts rated this stock. Because basically there's other equity research companies and big investment banks that are paid and spend millions of dollars on putting out research reports and pretty much analysts' decisions on what they feel you should do with the stock, right? So it's their own recommendation of whether you should buy, whether the stock is going to do well, whether it's doing bad. So we can see that recently there was a downgrade by a certain agency, but that doesn't necessarily mean much. You still want to learn more about it. Once you scroll down here, you can see all of the recent news about the stock too. So some of this news, and the reason I love FinViz is because you can actually see the effect of a certain news on the price of a stock. So you can start seeing, is this a stock that usually gets exposed to large changes in with news? And so what we see here is that there's a lot of news pretty consistently, but I believe that FinViz only lets you know if there was more than a 5% change in the stock value due to a certain news piece. So you can see here, if you upgrade to FinViz Elite, you can use this as an active, ticker too. And this is FinViz Elite if you're interested. If you don't have a stock screener tool yet, definitely recommend checking this out. But if you want, I want to show you guys the best way to kind of get into trading. So we can also hop into yahoo.com/finance and put the stock in and do a bit more research, right? So this is AHT. Here, AHT, boom, the Ashford Hospitality Trust. And this allows us to just have more access to kind of the stock price chart. So what we can see here is that, okay, look, the stock is trading at a low, right? So there's something that happened that really caused the stock to decrease pretty large amount. It was just earlier this year, it was trading at about 560. Now it's only trading at 280. So you'll want to look into this. You'll want to see why there was such a decrease, what's going on. And then you can also kind of take a look at the prior dividends. We can see that they just offered a dividend in June 27. So it was while their decline was happening. And dividend history is important because that can let you know whether this is something that you should try and trade or invest, and whether you can feel comfortable that you'll get another dividend. All right, so that's kind of one of the ways to use FinViz. You can really find cheap stocks here just by playing around with the price. And again, you can change around if you don't, if you're not worried about dividends, you can change it around to any. You open up to a lot more stocks under $5. Still, average volume here. The reason I put the market cap here is because, massive companies go out of business all the time as well, but the larger the company, the bit more you can kind of trust that it won't have as frequent volatility, I feel, but that depends. You have companies like this one right here, Chesapeake, which is a very popular volatile stock. I think day traders trade it a lot, so you can see that its price is always all over the place. And you get some information here. You get the income, the sales, and the recent changes in analysis by different investment firms. So, it's an interesting tool. FinViz, it's great. You can really check out, if you're looking for a stock screener tool to be able to find and analyze stocks, this is the one you should go to. And if you want to find cheap stocks to buy, definitely recommend utilizing FinViz. If you have any more questions, I'm going to be doing more research and more analytics videos on YouTube and in penny stock. So definitely feel free to check out the video. Please comment below, like, and subscribe. I'm making these videos for you guys, so I really want to know whether or not this was relevant and what type of videos or what type of information you're looking for to be a successful trader. So feel free to comment below or email us at admin, that's ADMIN, @inpennystock.com. Hope you guys enjoyed the video. See you guys next time.